US jobless claims surged last week to 3.28 million workers. Now, this, of course, amid the fallout from the coronavirus and a sharp increase from the prior week. Now, today we're seeing US futures trade lower and European markets are in the red as well. So here to help us digest the market volatility is Serge Berger from thesteadytrader.com. Serge, good to see you as always. Let's start with the US dollar, because it looks like the dollar basket is very, very close to testing that key $100 psychological mark. Are we going to push below?
Well, I think, Victoria, these are the kinds of times where it's really best to take a step back and expand your time horizon a little bit. So what I like to look at, because the volatility right now is unreal on risk assets pretty much across the board. And so what I like to do is I like to take a step back and look at things from a longer term perspective to gain the proper perspective. So what I did is I took the monthly chart, which is literally like 1 month increments of the dollar index. And what we're looking at here is a very persistent try to push above. These are just very simple lines, but it does tell us a story that the dollar as a quote unquote safe haven is working, and there's dollar shortage out there still, and I would think that we're going to continue pushing higher here, as long as the virus is not contained, whatever that means. I'm certainly not a doctor. I can hardly put on a Band-Aid myself. But, I think for the most part, that's going to be the kind of time frame to look for. Maybe once we get to that point where we contain it globally, maybe then we could start to see the dollar easing off. But right now, strong dollar is going to continue to put pressure on risk assets, to largely speaking, and dollar index broadly probably push higher.
Okay, so if you're bullish on the US dollar, how low does it have to get in order to provide an attractive entry point for you? Is this looking like a good time?
Dollar versus which currency?
Well, as in the dollar basket, I was thinking, just as in we're seeing this broad dollar strengthening really since the start of 2018. Then, over the past couple of weeks, we've been seeing it roll over. And I think a lot of investors have been thinking, is that the end of the dollar bull run? Or is this just a bit of retracement before we head higher once again? I guess my question is, how much do you think that it's going to retrace before the bull run continues for the dollar basket?
Yeah, well, I think it's very difficult to pinpoint exactly which I'm saying, expanding time horizon a little bit. But what I can tell you is that there are some simple technical lines we can draw as reference points. And again, keep in mind, volatility is just very high, so you have to expand your stops and profit targets generally. But on the DXY itself, I would imagine anywhere around 99 to maybe 100 or so could be. This is very simple technical analysis, right? But we've had now a nice orderly pullback where maybe it starts to make sense to look at the basket again from a more near-term perspective. Again, I focus on it more through a multi-month, at least a multi-week basis.
Okay, let's get your view then on US equities, because we've seen a lot of bullishness in terms of price action this week, quite in contrast to the volatility that we've seen really since the sell-off began around the 20th of February. What's your outlook? Are you taking a slightly longer term view on this as well? Do you think that the bear market remains intact?
Yes. So I think you either trade in minutes these days, which I discourage most people doing in these markets, or you really expand your time horizon. So to give you a monthly chart, these are again monthly increments in the S&P. Not many people do these kinds of things, but it's of existential importance. And you might remember when we talked last year, and then certainly January, February, we talked about the risk of sharp mean reversion moves. And here we are. So just to give you an idea, the monthly charts told us all along that there's big risk. So for example, in January, we had big exhaustion buying where the buyers just couldn't push it higher. February, we had the first follow through selling month. And then, of course, we have March. So what I think we have to understand is how bear markets work. So they don't just an actual true bear market. And we haven't really had real bear markets in the past decade. But true bear markets don't end or not V-shaped, right? They're the bottoming processes or processes, they're not events. And so what I would expect is maybe into month end here, there's a couple of reasons why we might be able to hold up and push a little bit higher. But I would think we can have a very difficult and another choppy month in the month of April, where, in an extreme case, I wouldn't be surprised if we go as low as 16, maybe 1700. So maybe in the 16 to 1800 range on the S&P, depending how ugly things get. No one knows, right? But that would be a take out major loans on your credit cards and buy stocks kind of levels. How likely do I think we go there? 20% chance, right? But it's not impossible to think. But bear markets don't turn around on a dime. I think that's the important thing to understand at this point.
All right. What about the tech-heavy Nasdaq? Kind of where do you stand on that index versus the S&P? Which one do you see kind of the more opportunities for trading and also long-term investing? And do you think there's also going to be continuous bear market flows within the Nasdaq as well?
I think the real selling is still to come in some of the larger names, the Apples and maybe the Microsofts of the world, where we've seen nice retracements. But what I did here is I made a so-called ratio chart, a relative chart, which is very simply I took the Nasdaq 100 and I divided it by the S&P 500. And this is, again, a long-term multi-year chart, stretches back the lows here to 2006. And you can see the persistent relative strength in the Nasdaq 100. And we are still way above. So the December to mid-February massive breakout, the vertical move that you and I talked about at the time, when we said it wouldn't last, it's still actually there in relative terms. But I expect the Nasdaq 100 to have plenty of underperformance potential as we roll through probably the next couple of months or so is my guess. Because again, I think a lot of people haven't understood that you can have earnings recessions in these companies as well. And so I would be careful not to try to bottom fish too much. Apple and Microsoft, these are good companies, but you don't have to buy them at any price. So I would probably be a bit more hesitant to buy them in the short term. Longer term, I have no doubt they'll be fine companies.
All right. So what about your outlook for European equities? Because in terms of the fundamentals, there are certainly a whole host of reasons to be pessimistic when it comes to the European economy, in particular, of course, the fallout from the coronavirus. We know that it's essentially the epicenter of the disease. In terms of how that translates into markets, where do you stand on US versus European equities? Do you see more underperformance within some of the major averages across Europe?
I think in the short term, they're both going to be volatile. I mean, I'm not quite sure, there's a whole lot of discrepancy there or big differences. I think in the long term, when we look at a few years, I think it's important to understand that the demographics and also that there isn't really a tech sector in European equities, which is not to say there's not good stuff to buy. But I still think the growth engine is going to be led more by U.S. equities, again, largely because there's a tech sector. That's really a very simple analogy I like to do. But just from a technical perspective, to give you some idea, again, we use something like the Euro Stoxx 50. We're going to make a monthly chart. And right now, if you draw some very simple lines, and this is the kindergarten stuff, but these lines are still interesting for reference points. Drawing a line from the 80s all the way through here, we did actually reach support on the long-term lines just last week. So for perspective, I think this is important and to understand and quite frankly, given all this, I think, if we were to revisit those lows down there, I would think where I get anywhere near there, I would think it's a good opportunity to buy for the longer term.
All right, Serge, thank you so much for your time as always.
Thank you.
That was Serge Berger from thesteadytrader.com. I'm Victoria Scholar, and thanks for watching IGTV.